live stream. You're watching Closing Bell with me, Lovisha, Darad, and the markets remain directionless once again today. And we have the Nifty breaching below that 26,000 levels as well. So while we did start this week above 26,300, we are over 300 points down from those levels in just 4 days itself. Sensex 2 has stumbled by about 650 points, and with that, it has declined by over 1,500 points so far this week itself. So yes, the sentiment has clearly turned in for the worse, because if you look at the advanced decline ratio, that clearly shows a divergent gap with about 1:2 as of now. And it can be termed that, we are seeing a broad-based sell-off across the markets. But yes, sectorally, everything is down in the red. The picture remains quite in the negative territory. Metals particularly is the worst hit given the sharp surge the sector saw, and now some profit booking has emerged, and that is why you can see that Nifty Metal Index is seeing a cut of about 3% itself. Other than that, Nifty IT also seeing a decline of about 2%. Oil and gas also remains under selling pressure with about nearly 3% decline. PSU banks, realty are some of the other pockets that are feeling the pain today. But yes, the nervousness has definitely crippled in the markets, as it is visible by the India VIX at present. If you look at the India VIX, up by about 7% itself. So multiple triggers, be it the Trump's tariff shot on countries purchasing Russian crude, or even the Venezuelan upheaval, which started this throughout this week itself. That is what is keeping the market subdued and the panic button on as of now. So yes, that is what is keeping equities on a lower end, and of course that's bringing back shifting focus to the safe havens itself. But yes, coming to the top gainers and the losers on the Nifty 50 front of where we stand as of now, you can take a look. Eternal seeing a gain of about nearly 1% itself. SBI Life doing well with about 0.5% gain. Bharat Electronics, Adani Ports, Bajaj Finance, some of the other gainers on the Nifty 50. On the other hand, on the losing end, you can L&T has not been doing well. 3% decline coming in for the capital goods major. Hindalco also seeing a decline of about 3%. TCS, ONGC, Geofinance, Wipro, some of the other losers on the Nifty 50. But yes, to understand how the last minutes of the trade look like and how you should be positioned going ahead, I'll quickly go across to my technical expert of the show, Nilesh Jain, Head of VP Derivative and Technical Research at Centrum Broking. Nilesh, good afternoon. Wishing you a very happy new year first of all, but definitely the cheer cannot be felt on the Lal Street, because Nifty has slipped below 26,000, and India VIX that started the week sub 10 is nearing that 11 odd level. So how are you reading into this?
Very good afternoon to you, Lovisha, and wish you a very happy new year too. So looking at the today's action, where we have seen 4th consecutive days of decline in the Nifty index, and not only that, Nifty in fact today has given a major breakdown from its 21-day moving average as well as 50-day moving average. Both the important levels have been taken off. Looks like we are likely to close below 25,900 mark. And that will also will be a close below a rising trend line as well. So looks like a kind of a structural breakdown for the Nifty, and looks like it is heading towards 25,500, 25,600 zone. That's the 100-day moving average next support for the Nifty. So overall, sell-on rise kind of a structure as of now. And even in the Bank Nifty, if you see, it was unable to sustain above 60,000 mark yesterday. Today as well, we have seen selling pressure coming in at the high level. So a sell crossover can also be seen on MACD. So looking at the overall derivative data as well, the setup looks negative, and we can expect a follow-up on the lower side to continue. Adding to that, if you see volatility index India VIX, where we have seen a spike of 6.5%, it has reached to the levels of 10.5. So rising IVs are also a cause of concern. So based on all the setup, looks like if at all you say any pullback, that is likely to get sold into.
All right. But, Nilesh, it's red across the board. Even the small caps and mid caps particularly that help the markets recover losses even till yesterday, that has also succumbed to the selling pressure, and it's underperforming the benchmark. So what can we watch out from here? And of course, the broader end of the markets going ahead.
Absolutely. So if you see the broader markets, Nifty mid-cap index specifically, these particular indices have also given a breakdown. Similar to the Nifty index, it broke below its 21 and 50-day moving average. Next support is coming, psychological support, that is coming around 60,000. So another 200 point fall seems very much likely. And even if you see small cap indices, where we have seen a constant underperformance in the previous series, And today as well, we can expect we are witnessing a 2% crack in the small cap indices as well, and also it has given a break below its long-term 200-day moving average. So looking at the setup, looks like the broader markets may underperform in the short run over benchmark indices. So the better strategy would be to stick to the quality names from the large cap space. If somebody wants to accumulate, that's the space where one can look for better margin of safety. So as of now, the focus should be on quality stocks on declines from a little positional perspective. From a very short-term trading perspective, looks like we may see this kind of consolidation to continue with negative bias.
Some consolidation can be continuing for this broader end of the markets. We'll watch out how it behaves. But currently, if you can see Nifty mid-cap, definitely you can see like nearly 2% decline coming in for the index itself. But not just the broader end of the markets, but the sectoral participation has also remained weak. Metal index clearly taking a breather after days of rally. Nilesh, any names to accumulate in this dip? Because, I mean, it's the worst sector as of now, 3.3% decline coming in for the index.
Absolutely. So metals are witnessing a sharp, kind of a selling pressure today. The reason being we have already seen a good run up in this particular sector over last couple of weeks now. So it looks like merely a retracement of the entire run up. But as of now, there are no signs of no signs of bottoming out. There could be possibility of follow up more on the lower side to continue. So the better strategy would be to better for a day or so, let the dust settle down in the metal space as well. Few names that are on our radar. First of all, Hindustan Copper. We continue to remain bullish on this particular counter, but not at current level. If at all you get any dip towards 500 or 490, that can be a good entry point. Keeping a stop loss below 470, then probably we can expect a pullback move towards 550, but not advisable to buy at current level. Another space, another stock, that's Hindustan Zinc. Again, if you get dip towards 570, 560, that can be a good entry point. Keeping a stop loss below 540, Hindustan Zinc also can be added for upside target of 640, 650. But having said that, metal space is something we may see further follow-up move on the lower side, kind of a selling pressure to continue for next one or two trading session. Given the kind of today's move we are witnessing, there seems to be this kind of a selling pressure likely to extend further.
Okay, all right. Nifty Metal Index, of course, I mean, some consolidation could be on the way for the next 1 to 2 trading sessions. So we'll watch out for how the metal counters behave. But yes, FMCG names, let's talk about them because we've seen certain names reporting their Q3 provisional figures. But the index has been down nearly 4% this month. Nilesh, I mean, would you advise investors to stay away from the FMCG pockets? Is it a clear avoid for you then?
Absolutely, Lovisha. You have rightly mentioned that this space is better, should be avoided for a couple of reasons. First of all, if you see the Nifty FMCG index have given kind of a form, it has formed a lower top and lower top formation. First of all, on the weekly time frame chart, it has given a breakdown as well on the from a horizontal support line. And also, if you see these particular indices have underperformed in last couple of months now. So we are not witnessing any sort of confirmation of a trend reversal as of now. The structure looks sideways to weak. If you pick any names in from this particular space like HUL, Dabur, Britannia, all these stocks are constantly trading in a lower top and lower top formation on the weekly time frame chart. So not advisable to take any contra bet in this particular space. We can expect this consolidation to continue, and better strategy would be to stay away from the FMCG space from a short term perspective.
Okay, all right. Clear avoid then for the Nifty FMCG. I mean, Nilesh, we discussed about metals, FMCG, but any other sector that you're keenly watching out before the Q3 result season starts?
From a sectorial point of view, one particular sector that is looking weak, I would like to highlight that first. That's OMC space, oil marketing companies, HP, BP, IOC. All these three stocks have given a crack. So we may see a follow-up on the lower side to continue. HP, BP, IOC, all these three stocks are looking weak. So from a short-term trading perspective, sell on rise should be the strategy. One particular space that is, in fact, if you see banking space, specifically private sector banks, small private sector banks are doing good. IDFC First Bank, specifically this particular stock is looking positive. we have seen a constant formation of a Hattam and Hamilton formation. In spite of such a sharp selling pressure today, this counter is up close to 2%. So structure-wise looks strong. We may see a follow-up move on the upside towards 88 to 90. Keeping a stop loss below 82, buy and decline should be the strategy in this particular counter. And not only this particular counter, if you see Karur Vysya Bank and also large cap names like ICICI Bank. So in such kind of a market where you are witnessing a sharp selling pressure across all the major indices and stocks, so ICICI Bank is bucking the trend, and we are witnessing for the fifth consecutive session, this counter has given a good momentum. So looks positive on the chart for 1460, 1500 kind of target on the upside. Keeping a stop loss below 1400, this particular counter can also be bought.
All right, ICICI Bank clearly an outlier, and just 5 days itself we have seen that the stock is up by about 7% itself. But yes, let's talk more about stocks. We have Balaji Amines, which has been doing quite well. It's at days high level at this point of time, 14% gains. And of course, the company has done well after it said that it has become eligible for over 250 crore worth of government incentives following an approval for expansion under a Maharashtra state government scheme. Now, the government of Maharashtra has issued an eligibility certificate for the expansion of its unit under the mega projects investment. And in addition, the company will also be benefiting from electricity duty exemption and 100% waiver on its stamp duty as well. I mean, Nilesh, clearly, I mean, one of the buzzing movers today, and a good breakout on the charts too. Do you expect the trend to sustain going ahead?
This particular space is doing well today. Balaji Amines, Alkyl, both the stocks are up. But if you see the major trend, if you pull up last 2 year chart of Balaji Amines, you can clearly see the stock has been in a downtrend. Not only 2 year, if you see since 2021, the counter has been in a constant downtrend, forming a lower top and lower bottom formation. Constant supply on pullback can be seen on this chart. So as of now, looks like merely a pullback move, a dead cat bounce, you can say. But since it was trading in extremely oversold territory, it has formed a good double bottom formation as well. So there could be possibility that this pullback may extend further towards 1300 to 1400. And now it is important to break 1400 barrier because that's the long-term 200-day moving average. If it breaks above 1400, then it will be considered as a short-term bottom. Then we can expect bigger target. But as of now, from a short-term momentum perspective, yes, 1300 to 1400 kind of levels can be seen on the upside. The support has shifted to 1160, but not advisable to initiate any fresh long position because the risk and reward is not looking favorable.
Okay, all right. Risk reward remains a little unfavorable at this point of time, but 1300 targets can be watched out for this particular counter. All right, let's move on and talk about another stock in focus. That's your Dr. Reddy's Lab. Currently, the stock is seeing a decline of about 3%. And we have a brokerage note that came in from Citi that has reiterated its negative stance on the counter. Now, they have given out a sell rating on Dr. Reddy's and given out a target price of about 990 rupees per share, which implies about 20% potential downside from the current levels itself. Now, this is also the lowest price target on the street for the drug maker itself. Nilesh, coming to you, I mean, the stock anyways has been spiraling downward. Today, it's adding to the anxiety to it. I mean, despite how the pharma stocks were earlier doing well this week, Dr. Reddy still sees decline. Can we see further fall ahead for this company?
Lovisha, absolutely. There are multiple triggers for this particular counter that it may slip further because if you see on derivative front as well, there has been a fresh OI addition of close to 10%. So clearly a short build-up candidate for the day. Technically, we have seen a crack and a breakdown below 200 long-term moving average. So with that, it is trading below all long-term and short-term moving averages. So there are high possibility of a follow-up on the lower side to continue towards 1160 to 1100 as well. So from a short to medium term perspective, 1100 to 1050 kind of levels can be seen. As long as it trades below 1250, the structure is kind of a sell on rise.
All right, that's the view coming in for Dr. Reddy's as well. But yes, let's move on and talk about another stock in focus. That's your UPL. The stock is clearly near its day's low level, but we had an interesting brokerage note by HSBC where they have raised the target price by nearly 9% and have given out a buy rating on the counter and a target price of about 925 rupees per share, which implies about 15% potential upside from current levels. Now, what the analyst has said is that the UPL subsidiary, that's your Advanta, is a long-term value creator and they believe that the drivers are in place which will support growth and value creation forward. Now, HSBC cited some reports suggesting that UPL is looking at a potential listing for Advanta on the capital markets, which it said could unlock value and support the debt reduction for the company itself. Nilesh, good brokerage note. They're seeing some value unlocking in the particular counter after its listing of its subsidiary, and even the stock has been edging upwards despite today's little bit of a sell-off. What would your next target be on the counter, and how does the trend look like?
No doubt the major trend is on a positive side, although today we are witnessing some bit of selling pressure because there has been selling pressure in the market. So that's why we are witnessing some profit taking, you can say, in this particular stock. But on the weekly time frame chart, if you see, the stock earlier gave a multi-year breakout from a major falling trend line. The breakout was witnessed somewhere around 770, 780 levels. So that will act as immediate support now. On the upside, positional target comes somewhere around 850 to 900. But that's again a positional target. And if you get any dip towards 780, 775, that can be a good entry point. So structure remains buy on decline, and the stop loss should be placed at 760.
All right, stop loss can be placed at 760 for UPL. But yes, let's talk about another stock in focus, Angel One. The stock is nearly to its day's low level, and we can see about 2% decline coming in for the counter, given that it also released its business update for the month of December and as well as the third quarter. Now, for the third quarter, the gross client acquisition has increased marginally on a sequential basis, but it is sharply down by 16% from an annual perspective. Even its average daily orders in the December quarter has increased from a sequential perspective, but declined by about 10% from the year ago period. Nilesh, how are you finding this on the charts? Because from November onwards, the stock has been exhibiting a negative trend.
Certainly the stock continues to remain under pressure, and we are witnessing a constant selling pressure at the high levels. In between, we did see some bit of a respite for the 5 consecutive sessions of rally we have seen in this particular counter, but today once again it is witnessing selling pressure. The good part is that the stock has a very strong support at 2330. So one should keep that as a stop loss, and if somebody is already holding the long position, can continue to remain long, keeping a stop loss at the same level. We may see a gradual up move towards 2550 to 2600. We may not see a major V-shaped kind of recovery in this particular counter, but yes, a gradual up move with consolidation is something that can be seen. But as far as this particular space is concerned, where majority of the broking stocks and exchange related counters have witnessed selling pressure at the high levels. So yes, the structure looks slightly sideways as of now.
Structure looks sideways for Angel One, but let's move on and talk about one particular stock that again has been bucking the trend today. That's your Panacea Biotec. Now the stock has already gained by about 6 to 7%, given that the company announced the completion of enrollment in its phase 3 clinical trial for its dengue vaccine candidate. Now, what has the company said is that they expect this vaccine to be the country's first indigenous single-dose dengue vaccine, and they expect a market launch by about 2027, which is your next year itself. Now, the company has been working on the vaccine since 2008, so that underscores that they have undergone a long and complex procedure associated with this vaccine. Nilesh, good news, good breakout. What's the next target we can watch out for? The stock is at this high level.
Today, indeed, we have seen a good price and volume breakout. The stock has crossed the 400 mark with a gap up opening. So it looks like a runaway gap, and we may see a follow-up move on the upside towards 450 to 480. And positionally, also, we may see the levels of 500 plus in this particular counter. But again, since it is up close to 12%, 13% today, in the previous session also, we have seen a spurt. So the risk and reward is not looking favorable in terms of making a fresh entry. But yes, the structure looks strong for 460 to 480 or 500 kind of levels on the upside. Keeping a stop loss below 400, yes, this counter can be bought on declines.
Okay, all right. That's the view for Panacea Biotec. Nearly 12% gains, 13% gains coming in for the stock itself. But yes, let's talk about capital good companies, because they are seeing a sharp slide today. Be it your BHAL or even ABB India, Siemens, L&T, all of them seeing a slide of about 8 to 9% itself. Nilesh, coming to you for capital good companies, how does the stock look like on the charts going ahead? Because plenty of counters are seeing a sharp fall today.
Absolutely. So there has been a sharp decline, specifically in the second half of the session. We have seen a sudden fall in cap code space. From a short-term perspective, the structure is not looking promising. We may see a follow-up on the lower side to continue. As far as ABB, Siemens, these counters are concerned. But if I have to pick any one particular counter on the long side within this space, that would be BHEL Pale. If you get any dip towards 270 to 260, that can be used as a buying opportunity, keeping a stop loss below 255, but not at present level because today's fall is very much supported by the volume. So there is high possibility of a follow-up on the lower side in the coming session to continue.
Okay, that's the view coming in, and could be we could see some fall going ahead. That's what Nilesh has been saying. But let's talk about another stock in focus. That's your RailTel. Despite an order book win, the stock is seeing a decline of about nearly 5% itself. But yes, they did win an order win of about 100 crore rupees work from the public financial management system to set up and manage critical IT infrastructure. Now, that order does involve establishment and managing operations of the IT infrastructure. But yes, the stock has been seeing a fall of about 4% itself. Nilesh, despite today's fall, in the past 1 month, the stock has still seen a good buying traction, up by about 13%. What can we watch out next here?
See, after today's fall, RailTel is approaching to its multi-month falling trend line support at 342. So that support should be defended, and we may see a pullback move going forward. So if we just remove the today's move, then looks like the structure has been on a positive side on the back of a recent run-up that we have seen across all the railway counters. So this stock has also given a good pullback move. But keeping a stop loss below 342, if somebody is already holding the long position, can stay put. In terms of making a fresh long position, I would suggest to better wait for a decline towards 345 to 348. That can be a good entry point, and a pullback can be played towards 365 to 370.
Okay, all right. That's the view coming in for RailTel itself. But let's move on and talk about some of the export-oriented names. You have Gokuldas Exports, Avanti Feeds, all of them seeing a decline today on the back of US President Donald Trump saying that purportedly backing a bill that threatens to raise tariffs on countries which is buying energy goods, including oil from Russia, to at least 500%. And if approved, the bill will add pressure on countries like India, China and Brazil, which continue to purchase Russian oil despite the US sanctions. But of course, we have already cut down the purchases, but definitely we can see that the sentiment remains an overhang for plenty of these counters. Nilesh, coming to you, of course, once again, the tariff threat continues. And the sentiment, the weak sentiment continues for Avanti Feeds, Gokuldas Exports. So how does the charts look like for the near term?
Well, near-term chart looks weak for as far as GOKEX is concerned. Gokuldas Export today as well, we have seen multiple, multi-month breakdown in this particular counter from the levels of 665. And on the lower side, it may test the levels of 600 to 580 going forward. So structure is looking slightly on a weaker side. And we have already seen a downtrend all the way from the levels of 950, and it has also breached important support of 660. So structure looks weak as long as it trades below 660 mark, and we may see follow-up towards 600 to 580.
Okay, all right. That's the view for Gokuldas Exports. And of course, we'll watch out by how the majority of the export-oriented names actually pan out going ahead itself. But yes, IT stocks continue to feel the heat. Now that we are talking about the export-oriented themes. Nilesh, how are you placed here? I mean, ahead of the Q3 earnings, I mean, anything that you're finding attractive? And of course, would you advise investors to accumulate this particular dip?
If you see Nifty IT index, yesterday we have seen a strong pullback move on the upside, but today that move has been fizzled out and it has slipped. Nifty IT index slipped below its 21-day moving average. But good part is that it has major support at 37,200, 37,300 zone. That's the 50-day moving average support. So one has to pick quality names from the IT space. We remain bullish on the IT space given the kind of a rebound that we have seen from the lower levels. So stocks like TCS, Infosys, SCL Technology are the few names that can be accumulated on declines. and we can expect a gradual up move to continue. Specifically, SCL Tech, we remain bullish for 1700 to 1750 target. Keeping a stop loss below 1600, this can be bought from a short-term trading perspective.
All right, that's the view coming in from the IT pack, and of course, from next week onwards, we will be seeing, HCL Tech, TCS kicking off the India Inc. third quarter earnings itself. But let's move on and talk about another stock in focus. That's your Glen Pharma. The stock is off the day's high level. Today, it did rise to over 1 month high after getting an approval for its eye allergy drug from the US FDA. But the stock has cooled off from those levels as of now. Nilesh, what can we watch out next for Glen Pharma, and what are the levels we can track here?
Okay, Glen Pharma, it is currently trading at 1690 levels, and it has faced resistance at 200-day moving average today itself, and it couldn't surpass the same, but it has important support at 1650. As long as it trades above 1650, there could be possibility of a further pullback move towards 1750 to 1800. So structure from a pullback perspective is still on a positive side. Keeping a stop loss below 1650, one can take a contra bet in this particular counter for upside target of 1730 to 1780.
All right, that's the view coming in for Glen Pharma. But yes, the heavyweights continue to see a decline. HDFC Bank continue to remain a key laggard on the Nifty 50 index. And even Reliance Industries, for that matter, is seeing a decline of about 2% currently. Nilesh, coming to you, in the past 4 days, Reliance Industries has already seen a decline of about 8% itself. So going ahead, how does the outlook look like from a near-term perspective?
Absolutely, Lovisha. So this week is pretty bad for Reliance Industries. It has given a crack of 8%. I think one of the biggest crack on a weekly basis we have seen in the recent time. So that is a kind of, you can say, a major culprit for the market where the sentiment has been weakened. So overall, Reliance is still looking weak on the downside. 1450, 1430 kind of levels might be tested. So as long as it trades below 1530, the structure looks sideways to weak for the Reliance, and the lower side 1450, 1430 and 1400 are the levels might be tested. Similarly, in the HDFC Bank, if you see, it is still comparatively better placed because it is holding above its multi-month support of 940. So 940 is a very important make or break level for HDFC Bank. If it breaks that particular level decisively, then we may see follow up on the lower side towards maybe 920, 900 is quite possible. So watch out for that important level on the upside. Break above 960 may attract a short covering towards 982,000. So as of now, ideally one should keep a stop loss at 940 and stay put in HDFC Bank.
Okay, stay put in HDFC Bank as of now. But yes, sir, we'll watch out how the heavyweights react also in the upcoming trading sessions, given so far this week, both of them have been quite the laggard as of now. But yes, sir, let's move on and talk about another stock in focus. That's your LG Electronics. The stock clearly came to at record low levels after its 3-month lock-in period ended. Nilesh, how are you placed? I mean, of course, it's a limited data, but when the stock did debut the bosses, it was every brokerage firm was quite bullish on the particular counter. Would you advise investors to accumulate this dip then?
Since listing, we have seen only one trend, that's stock is going on the downtrend. So constantly forming a lower top and lower top formation, and today as well it has tested 1400 level. I think since listing we have seen a decent correction. If somebody is looking to make a fresh entry, then probably these are the good levels in the range of 1300 to 1400. This can be accumulated as a positional bet, but one should have a time frame of 1 year plus. Then only this particular counter can be bought, not from a short-term trading perspective, and a stop loss can be placed at 1200.
Okay, stop loss can be placed at 1200 for LG Electronics. But yes, the last rates coming on your screen, where Nifty has closed with about nearly 300 points cut, 1% decline coming in for the benchmark index. And of course, it's the 4th day fall for the Nifty 50 as well. And of course, for the Sensex itself. Sensex also seeing a decline for about nearly 800 points. Remember that this is also the weekly expiry day for the BSE contracts. So that's a reason why we have also seen that some volatility has been on the higher end. Nearly 1% decline coming in for the Sensex. So both the benchmark index has closed quite in the red as of now. But yes, the picture across the board remains negative. If you look at the advanced decline ratio, that is clearly in weighing towards the declines as of now. Till yesterday, the advanced decline ratio was still, picture perfect to hold enough the markets into a flattish territory, but today we are seeing the selling pressure has been imminent across the board itself. If you look at from a sectoral perspective, all of the sectoral indices have settled in the red. Be it your Nifty Metal Index, like I was talking about, second day of consecutive losses, 3.5% cut coming in there. Nifty Realty also seeing a cool off of about 2% decline. Nifty IT Index ahead of the Q3 results, seeing a decline of about 2%. Pharma, FMCG, you name it all the sectors have been seeing a bit of a selling pressure today. Even the broader end of the markets, even they have succumbed to the selling pressure. If you look at the Nifty Mid-Cap Index, that is seeing a decline of about 2%, and small caps also seeing a sharp decline of about 2% itself. On the back of all of this, India VIX has surged by about 6%, so some volatility and nervousness has been crippling the Lal Street as of now. But let's take a quick check of how the top gainers and losers look like on the Nifty 50 front. Eternal has been doing well, 0.5% gains coming in from there. Second day of consecutive gains for Eternal. SBI Life also doing well with about 0.5% gain. ICICI Bank holding on to the gains. Bajaj Finance and Bharat Electronics. So all in all, we have just 5 gainers on the Nifty 50 front as of now. But yes, the losers remain quite wide. If you look at Hindalco, that's seeing a cut of about 4%. Jio Financial, 3.5% decline. Wipro, ONGC, Tech Mahindra, TCS, all of them seeing a decline of about 2 to 3% itself. Nilesh, coming to you for Eternal, still holding on to the gains. 2%, nearly 0.5% gain coming in for there. But how does the near-term outlook look like? Because in the past 2 weeks, we've already seen that the stock has seen a decline of about 8 to 9%.
Right, Lovisha. So right now we are witnessing a good base formation happening in this particular counter. It is trading close to its 200-day long-term moving average, that is placed at 282 exactly. It has ended above that, and also facing resistance at short-term 21-day moving average, that is placed at 285. So overall, this setup is indicating that there is something called base building happening, base formation happening in this particular counter. So we may see a gradual up move towards 300 to 320 from a short to medium term perspective. The risk and the reward is looking attractive at present because the stock is trading at multi-month lowest level. So 275 should be the stop loss. And on the upside, 295, 310, this kind of target can be seen in the near term.
All right, that's the view coming in for Eternal. But just one last question before we let you go, Nilesh. What are your top picks at this hour? We're seeing a broad-based sell-off across the markets, but anything that you would advise investors to accumulate this dip?
Right, Lovisha. So the focus should be on the stocks where we are witnessing a good momentum. So as mentioned, IDFC First Bank is something that we remain constructive in this particular counter, and the stock is constantly forming high top and high bottom formation as well. So overall, banking is still, better place compared to the other sector, specifically private sector bank. We spoke about ICICI Bank as well. There also we are witnessing a good momentum, and that counter is also looking strong. So IDFC First Bank, upside target could be seen somewhere around 88 to 90. Stop loss below 83 can be placed in this particular counter, and one can go long in IDFC First Bank. And the space that is not looking promising, we spoke about OMC space, it's an avoid. And one particular counter on the negative side, that's Ambuja Cement. It has given a breakdown. So on the lower side, 520 kind of levels can be seen with a stop loss above 555. Ambuja Cement is a sell.
All right, those are the stocks that we need to watch out for, and of course OMC stocks remain quite cautious on that particular theme. All right, on that note we have to let you go, Nilesh, but thank you so much for your time and joining us.
Thank you, Lovisha.
Of course, clearly it has been a disappointing day because if you look at the Indian equity markets and of course the benchmarks, they have slumped for the 4th consecutive session itself. Sensex has also lost by about nearly 1,500 points in just 4 sessions. Nifty 50 has also retreated by about 2% over the same period itself. And metal stocks, that has been hit by the annual rebalance, and Nifty Metal Index was one of the top sectoral underperformers, seeing a decline of about 3% itself. So nearly 400 points decline that came in for the metal basket. Of course, we've seen a good amount of rally in the metal index, be it last year or even the start of this this particular year. So some profit booking has been taking place, and as a result of which we saw several of the metal counters also seeing a little bit of a decline. But yes, apart from that, export-related counters, be it your Avanti Feeds, Gokuldas Exports, all of them also fell in today's trading session, given that US has once again hinted at 500% tariffs on those countries which will continue their purchase of Russian crude oil. But yes, investors were grappled with a cocktail of the geopolitical tensions, the US tariffs, and even the uneven corporate earnings, which has overshadowed the pockets of optimism. So yes, a couple of factors that weighed in on the sentiment. The first was your Trump's Russia's tariff bill, which raised the heat on India, where they have threatened of about 500% tariffs on those countries which would purchase the Russian crude. Then we had the heavyweight stocks which dragged the benchmarks, be it your HDFC Bank, Reliance Industries, all of them, did see losses in today's trading session. Apart from that, the geopolitical tensions in the West, be it your Venezuela political upheaval, still continues to dominate the headlines as of now. But yes, to understand and talk more about markets and broadly where we are headed from here on, let me quickly get on board Ashutosh Mishra, Head of Research, Institutional Equity at Ashika Stock Broking. Ashutosh, good afternoon. Wishing you a very happy new year. But markets, clearly, they have been directionless this week, right before the Q3 results. I mean, what would you expect going ahead? Because, the geopolitical tensions have been making the markets nervous as of now. Ashutosh, I think your audio is mute.
Yeah. So, Happy New Year, and thank you for inviting me here. So if you look at market, surely this time market is a bit confused just before the crucial third quarter results, and especially given the way geopolitics is panning out at this point of time, market is bit nervous. Which direction things will move up, and there are some big events which has taken place in the last few days, and further U.S. Supreme Court decision on the tariffs and other are expected to come in the next few days out there. So these things are keeping people on the toes. We are very near to all-time high. Just before the earnings season, we are standing here. So keeping that in mind, I think it's okay. Things will get much more clearer in next week, and we will also start seeing budget expectation to start playing in along with IT result and banking result by the end of the next week. So I don't see any major risk. There will be some more consolidation may take place at this point of time, and few sector like metals which has seen a very sharp run up may see some cooling off for a time being. Yeah, that's what my view is.
Okay. But Ashutosh, even if you look at the heavyweight counters, be it Reliance, HDFC, ITC, they have all been weighing on the street sentiment. How are you viewing this? Because right now, not even the small and mid caps are underperforming, but so are the large caps. Because if you look at the small and mid caps today, they have seen a larger fall. But even the large caps have started to contributing to this entire market fall.
So, I see this more as a profit booking trend. Large cap has outperformed the market very well in the last 2 months period, if I say post Diwali or from the independent, or I say the independent, the GST rate cut things when start kicking in. From that period, we have seen a very sharp run up in the market. So probably some cooling off in the large cap is taking place. But will you ask me is there any fundamental issues as such? I don't think so. US tariff things are getting delayed. This is one of the concerns which market have, but that's okay. Market is now not expecting that. No, this week we are going to sign tariff negotiation with the US or as such. So that is now already factored in that it may take further delay from here onward. So next trigger which I clearly see is the third quarter earnings and the budget expectation, which will start playing in from the next week onward.
Okay. Ashutosh, you were talking about the metals. That has clearly, seen a sharp rally. And even for the Q2 earnings, they had been one of the leadership sectors. But with the kind of upsurge in the sector and the stocks that have seen, do you think that the upside could be limited from here on, particularly for the ferrous names because of the rising coking coal prices?
No, still I see that the way metal prices has gone up in the last few month, I still see there are a lot of room available for many of these metal stocks, especially on their financials will continue to improve over next 2 to 3 quarters. And the cycle super cycle of the metal has started up in the terms like, this sector was underinvested from the long time, and the AI and the way power demand has globally moved up. That has clearly put this whole sector into the focus out there. So, and not only the demand supply gap, but also the lot of restrictions. We are finding the silver prices are going up at this point of time because Indonesia, China, Russia, all of them are now putting control on the silver export, and the consumption of the silver in the solar panels to the fabrication industry other has improved substantially. So it's clearly, not only supply demand mismatch, but the supply control because of the geopolitical issues is expected to keep the metal prices up, and consequently, I clearly see the financials of many of these companies will continue to be very good in the coming years too.
Okay, got it. But Ashutosh, I mean, today we once again saw that the export-oriented stocks took a fall today on the back of US President Donald Trump's threat of about 500% tariffs on those countries that are still purchasing the cheap Russian oil. I mean, when he announced the 50% tariff penalty, I mean, the trade was already at a standstill. So do you think this impact is going to be beyond sentimental going ahead for majority of the export stocks?
Think so it will have any major impact even at 50% normal, see, tariff have also the same marginal impact, the way marginal utility play out. So 50 to 100 to 500 does not have any significant impact. India has diversified its export to the great extent. There are certain commodity which US cannot get from, even if suppose they will, if the US consumer need to pay 500 tariffs on some certain goods, they will pay and buy from the India part of it. So I don't think so. This 500% tariffs will have any significant impact on the ground, but sometime it will create a nuisance value. It has its own nuisance value that will play out. So Trump is not giving one statement. Yesterday he was giving that Modi is not happy with him. Day before that Modi need to keep me happy. So like no, it's a lot of confusing statement is coming from him. So I clearly don't see that no market will a new statement will come after 1 or 2 days. So believing each and every word of Trump and making a long term or even a medium term strategy based upon that is not right things to do.
Okay. But he's also said that Venezuela would supply about $50 million worth of barrel of oil to the US, to the US as of now. I mean, do you see an impact in the terms of commodity prices going ahead, and what does that mean for India? Does India actually benefit out of this entire situation?
Yeah, it's benefit out of like if you look at a 2 point Venezuelan crisis. Number one, if suppose the more oil will flow into the global market from Venezuela, this will help to cool off the global oil prices, and that helps in India in one way. Another way is that India has entered into a long purchasing agreement with Guyana, and no, there's a lot of conflict between Guyana and no with uh, and the conflict between Guyana and Venezuela post this whole thing will more in favor of some of the Indian company which has started investing big money in Guyana. So in that way, if you look, no, I think it's more favorable to India, both from the more supply coming into the market. India refinery will have an option not only from Russia but also from the Venezuelan oil to process it. But we need to wait out for like no. In the Venezuela, still US is not able to impose their own government. The new government which has come up is just old deputy of the earlier president who has taken over the country. So we need to wait and see how the things unfold there.
Okay, all right. Ashutosh, what about the capital good companies? I mean, today we are seeing a sharp fall across the name, be it your L&T, Siemens, ABB India. I mean, we have certain reports which have indicated that the government might rethink scrapping the curbs on Chinese firms who are bidding on government contracts. I mean, how does this play out on the sentiment, and what's your assessment on the impact going ahead?
This risk is there out there because, we need to see how if the toughness between India and US continue, probably India will little bit lean toward the China and will relax some of the things. But if you look at recently, also we have put anti-dumping duty in certain Chinese good. So yes, this risk is there. We cannot rule out that risk out there, but I don't think so. Relaxation will be as high as which will impact the Indian companies or Indian manufacturing. Government's focus is very much clear at this point of time that more and more domestication of the manufacturing is required to be done, and that will remain a key strategic focus of the government, in my view. And that's why no this risk is there, but we don't need to overplay this, in my view.
Okay, okay. Ashutosh, coming back to the Q3 earnings season, any sectors that you're watching out for going ahead? I know we discussed about metals earlier, but apart from that?
So banking results is expected to be quite good. And banking NBFC results is expected to be quite good. IT will be a bit of subdued, but we start getting some green shoot in IT in the terms of AI revenue recognition, how AI will play out. All those things will be, I think, like TCS has started giving more clarity on AI revenues. Some of the mid cap IT companies probably will be major beneficiary out of this whole things. So no. Banking one, where I clearly see good results and trajectory is improving from here onward. If the budget will be good, then probably we will see a very good run up in the banking stocks out there. NBFCs are also doing quite well. That will be the one part. Even railway, I clearly see good uptick taking place. Defense is another sector where no clearly both order win as well as no some of the revenue recognitions. I see no the company will deliver good numbers on that. Even on consumer front, like no. Although FMCG companies has disappointed in the last few quarter, but the post GST rate cut, it will be the first quarter the impact of the whole GST rate cut will be reflected out there. So I expect a good result from the consumer company also, like the Titan result. If you look at no business update, if you look at probably that was a quite good on that sense. So I clearly see good numbers to come from some of the retail and consumer oriented stocks also in this quarter.
Okay, okay. Retail is something that you're betting
And
on.
DMart will be the one of the stocks which we can look at, the first company to deliver on that front.
Okay, okay. But banking names, you mentioned that you're expecting a good quarter. I want to know in terms of LDR ratios that remain at quite elevated levels. Do you think that at some point it could be a margin or even a profitability risk going ahead?
I don't think so. LDR, see, there is a lot of discussion between banks and regulator on LDR versus LCR. So LDR is the ratios which is used by the RBIs in 90s and 2000, early 2000, and now they are using more of the LCR part of it. So and new RBI governor seems quite clear in his thought process that if suppose they are cutting rate, relaxing liquidity, then at the same time they need to put for such type of framework which is more positive for industry to expand the credit growth. And given the threat from the US on the terms of tariffs, government focus is also towards that. So I don't think so any negative or no steps will be taken by the regulator to bring down the credit growth or as such. So yes, we will keep discussing this part of it, but I don't think so that because of CD ratio and other parts, something credit growth will start coming down. I don't see that risk coming down. The way on the liquidity, the way on the forex, RBI has acted upon, has played the things in the last few months. I don't think so that risk will be there. The credit demand will be posed by the government, uh, by the RBI. This is quite visible, and that play will be there, and that's why I don't see that risk to play out.
Okay, okay, got it. No, no risk for
And
from
even in
that
that
front.
case, yeah, even in that case, public sector banks are very well placed because still their CD ratios are far below. So some of the private banks may face pinch on that part. Public sector banks are very well placed on that part. Still, they have a growth room for another year or so to play out. Valuation is also quite reasonable. I don't think that risk will. If there is a growth, there is no dearth of fund to fund that growth for the banking space.
So would you say that you're more bullish towards the PSU banking pack versus the private lenders at this point of time?
Yeah, my first preference will be few large public sector banks, followed by the few large private banks. And
Okay.
mid-sized banks will also start playing out because deposit rate cut impact will be start getting reflected from the third quarter onward from some of the smaller and mid-sized banks, because they have more term deposit in their books, and these term deposit takes normally 6 months. The cut in the term deposit it normally takes 6 months to get reflected. So from this quarter onward, we will see some surprise on a NIMS front from the some of the mid and small size banks.
Okay, all right. That's how the financials play. But Ashutosh, you were talking about the IT names as well. A subdued quarter is what we are expecting. But valuation comfort is where investors have been focusing on. Just when there was no value left in the market, IT regained the focus. But do you believe going ahead, this is going to be the sector in terms of valuation comfort, or would you suggest investors to lighten their positions until there is a clear growth visibility?
So yes, there is a like no, we have played one round of impact of AI on IT companies, especially Indian IT company on a service space. What has changed in that now? Like no, like if you look at go back in early days of COVID, post COVID, their digitization was the one of the key things which people were discussing about post COVID. And after initial fall, suddenly Indian IT companies start receiving large order to execute large scale digitization thing. Similarly, there was an initial level of negative sentiment on AI front because of if suppose there was a five coders required to do some jobs, now with AI only one person is required out there. But no, the volume of work itself is no, I expect to go up. And no, still there is a lot of scope for Indian IT companies to deliver uh, or get more business from the global arena. Despite some of the concern coming out from the US that no, there will be some type of no tariff on not tariff but some type of duty on no some of these export to India, service export to India. But what we are clearly seeing that no, many of these international companies are now putting GCC in India. So in that term, in a direct or indirect way, we will clearly see no Indian IT company to regain or start taking advantage of this whole AI rollout at a global level. And yes, valuation is comfortable, but is things is going to be as rosy as what happened post COVID? I am still not very clear upon that. I will wait take that call, but some green suit is clearly coming up at this point of time.
Okay, okay, all right. Some green shoots possible. All right, just one last question before I let you go. I mean, of course, it's been a range-bound market so far, but your suggestions on the investing strategy for investors? I mean, should they be on a hold mode until we have more clarity on the Q3 results front, or should they start accumulating?
I think this will start accumulating some of the good names, and clearly that should be focused upon. India's story is still playing out quite well. Okay, and no, things are working more on a productive way out there.
All right, all right. Right, this is something that we need to watch out for. But on that note, we have to let you go, Ashutosh. Thank you for joining with us.
Yeah, thank you.
All right, that's all we have for this edition of Closing Bell. But of course, it's a clear day of bearish market, because if you look at the benchmark index, fallen for about the fourth consecutive day, and even that 26,000 that the Nifty was holding on to very dearly has been shaved off, and that has slipped below that 26,000 levels. Of course, if you look at the Nifty 50 stocks, it has been just 45 stocks have clearly ended up in the red, and just 5 stocks have ended in the green. So it's an all-round sell-off which was visible in the markets itself. So yes, we'll be watching out if whether or not market would continue this fall in tomorrow's trading session, or if there is certain respite after a long period of consolidation. But yes, for now it's a wrap from me. Thank you for watching, but do stay tuned to moneycontrol.com.